What if the next billionaire investor isn't a human at all? What if the future of Wall Street belongs not to traders in expensive suits, but to machines that can learn faster than any person alive? Artificial intelligence is no longer just powering self-driving cars or chatbots. It is quietly transforming the world of money. From predicting stock prices to managing risk to executing trades in milliseconds, AI is changing finance faster than most people realize. And in his groundbreaking book, Artificial Intelligence in Finance, financial expert Yves Hilpisch explains exactly how this revolution works. Today, we are breaking down the most powerful ideas from this book and why AI may completely reshape the future of investing. For decades, traditional finance relied on formulas. Analysts studied earnings reports, balance sheets, interest rates, economic cycles, and then made predictions based on human judgment. But the financial world has changed. Today, markets generate enormous amounts of data every second. Every trade news, headline tweet, economic release creates signals. The problem, humans cannot process that much information fast enough. That's where artificial intelligence enters. AI can analyze millions of data points instantly. It can detect hidden patterns no human would ever notice. Hilpisch argues that finance is moving from theory-driven investing to data-driven intelligence, and that shift could change everything. Because in modern finance, the investor with the best data often wins. Markets often look random. Prices rise, prices fall. News creates chaos. To most people, stock movement feels unpredictable. But AI sees something different. Machine learning algorithms can scan years of historical market behavior and uncover repeating patterns. For example, AI may detect that certain stocks tend to rise after earnings surprises, interest rate changes, volatility spikes, sector rotation. These patterns may be invisible to human traders, but to a machine, they become opportunity. This is one of the most powerful ideas in the book. AI doesn't just process information, it learns from it. The more data it sees, the smarter it becomes. And in a world where milliseconds matter, that intelligence can become a massive advantage. One of the biggest problems in investing is emotion. Humans panic, get greedy, fear losses, and chase trends. Even experienced investors make irrational decisions. But AI doesn't feel fear. It doesn't panic during a market crash. It doesn't become overconfident during a rally. It simply follows logic. Hilpisch explains how AI can power algorithmic trading systems. These systems can analyze market data, identify opportunities, place trades, automatically manage positions instantly, all without emotional interference. Imagine a system that can buy, sell, adjust risk, and rebalance portfolios, all in fractions of a second. That's already happening. Many hedge funds now rely on AI-powered strategies to compete in modern markets. And the role of human intuition is shrinking. Making money is important, but avoiding losses matters even more. Traditional risk models often fail because markets don't behave normally. Unexpected events can destroy portfolios. Financial crises, pandemics, geopolitical shocks, sudden market crashes. AI can help by spotting danger earlier. Machine learning models can identify unusual volatility, changing correlations, abnormal trading activity, liquidity problems before humans notice. That means institutions can reduce exposure, hedge position, or exit faster. Hilpisch shows that AI isn't just about making profits, it's also about surviving uncertainty. And in finance, survival is everything because one catastrophic loss can erase years of gains. One of the most fascinating parts of the book is how AI uses alternative data. Traditional investors study company reports, revenue numbers, analysts, forecasts. AI can go much deeper. It can analyze social media sentiment, satellite images, online shopping trends, web traffic, credit card transactions, news tone. For example, AI could estimate retail sales by analyzing parking lot traffic from satellites. It could predict consumer demand before quarterly reports are released. That means firms using AI may know what's happening before the rest of the market does. And in investing, information is power. But faster information, that can become profit. This raises a serious question. If AI can analyze data, manage risk, and execute trades, what happens to human finance professionals? Hilpisch believes AI won't completely replace humans, but it will transform financial careers. Future professionals may need coding skills, data science, knowledge, machine learning understanding. The successful investor of tomorrow may look very different from the investor of yesterday. Instead of relying only on intuition, future finance leaders may work alongside machines. Those who adapt could thrive. Those who ignore AI may fall behind. Because in the future, finance may belong to those who understand both money and algorithms. But AI isn't perfect. The book also warns about danger. AI can overfit data, misread unusual events, amplify market crashes, create systemic risks. If too many firms use similar algorithms, markets could become unstable. And if no one understands how an AI makes decisions, trust becomes a problem. This creates a new challenge, not just building intelligent systems, but building responsible ones, because powerful technology without oversight can become dangerous, especially when billions of dollars are involved. The biggest lesson from artificial intelligence in finance is simple. The future of investing is no longer just human, it is increasingly machine-driven. AI is changing how money moves, how risks are measured, and how wealth is created. And whether you are an investor, a student, or simply curious about the future, understanding this shift could become one of the most important financial skills of the next decade. Because the next revolution in finance may not come from Wall Street, it may come from code. If you enjoyed this summary, subscribe for more powerful book breakdowns on business, wealth, psychology, and the future of money. And tell me in the comments, would you trust an AI to manage your investments?